Good morning. It's Vijay here. Today's RBI day is out. Today is Friday, February 7th, 2025. RBI Governor will be the cynosure of all eyes at 10 a.m. This is the pre market commentary where we discuss what happened yesterday, what's likely to happen today, and in the following days. Now, the whole world seems to be waiting with bated breath as far as the RBI meeting is concerned, and with the new governor. So, people are looking at what can happen, whether we'll get a repo rate cut. So, the last time the repo rate cut happened was about 5 years ago. So, 75% of the people believe that a repo rate cut, an interest rate cut, will happen today. Now, I have been arguing for the past 1 year that RBI is behind the curve as usual. RBI has got a very spotty track record, even though the previous RBI governor might have got awards after awards on terms of the best governor in the world. I think the results are there for people to see. And we have one of the main reason for the slowdown in the economy has been the tightness of RBI policy. Now that has caused huge problems across the board, not only in corporate sector but also individuals. But basically, the economy has gone into funk because the RBI did not understand what's happening. Secondly, the finance ministry also did not understand what's happening. Now, the finance ministry has more or less made up for all the problems it created. Now it is the turn of RBI. Now, having understood what the RBI governor is all about, generally in the first meeting, the RBI governor usually has his say. I mean, the first too few meetings, as they say, new broom sweeps clean. So you will have the RBI governor generally batting on the front foot. And this RBI governor is a much more, what I would say, savvy kind of a person. He's a technocrat. That last one was a historian who quoted Mahatma Gandhi. This man, I think, will be completely different. I expect better things from him. In fact, I would say there could be a lot of positive surprises apart from the rate cut. Rate cut is one arsenal in the RBI's armory. So RBI in the last meeting cut the CRR. That's a good arsenal. Then the current RBI governor, what he did was he let the rupee weaken. Now it is very nice to do that, because then everybody knows what is the true strength or the weakness of the rupee, rather than trying to tighten it and lose a lot of forex reserves. So therefore, I think there will be more than just a rate cut today. The commentary, I think, will be very different, and I also think it will be refreshingly different. So now, will RBI cut rates? Everybody talks about it. It's 70% of the people expect RBI to cut rates. Let's see what the FIs have been doing before the rate cut. Most people are fearful that rupee will weaken with an RBI rate cut. So what is the question which we should ask? After all, rupee is artificially strengthened. If you let the rupee find its own value, sooner or later the foreign portfolio investors will realize that the RBI is no longer, looking to artificially strengthen the rupee, and then it has got a great chance for them to come back. But just when the RBI monetary policy started on 5th February, the record short contracts were there. They reduced a little bit day before yesterday, but again they are building in. So as we go into the RBI policy, the foreign investors are extremely bearish on the market, even though we had a good budget and the earnings have been really good. If you look at it, out of the 43 Nifty stocks which have reported, 16 are above expectations, 12 are in line. So 28 out of 43, nearly 70%, 60% are, are good or better. So only 12 out of 43, that's about 25%, is in what I would say 25 to 30% are not up to expectations. So the result season is not as bad as it seems. Yesterday, SBI came with results. They were good. Though people will always say they could have done better. Of course, anybody could have done better. But in the prevailing circumstances, the SBI results were good. So Nifty declined for the second consecutive session, dragged by Trent and BEL. Trent went up like a rocket, and it is coming down like a Deepavali rocket. BEL, I think a lot of positioning in this counter, so that's what we had. BEL losing ground, though defense budget is higher, and I think they'll get more projects this year, but nevertheless, positioning should have caused that. Mid cap and small cap snapped a two session gaining streak. Pharma advanced, Abbott India did well, Natco did well. Across the board, actually, pharma stocks did well. Nifty realty normally should have gone up because this is an interest rate sensitive sector, but it did not do too well. Energy also came down. Generally, Nifty came down yesterday about 90 points, and even Bank Nifty was, was on the weaker foot. But and also the overall market itself came down day before yesterday. The broader market went up, but yesterday that also fell down. So metals, Nifty, auto, everything. PSU Bank also came down. So US markets closed higher, though there was a lot of volatility, and Nasdaq closed up 0.5%. Though Google's results were not that good. Amazon, not that good mean they are not up to expectations. Today, I think Amazon results have come yesterday after the bell. So Amazon fell at one point of time 8% after hours, but now I think it has recovered. So Dow Jones was a loser. S&P and both Nasdaq went up. Treasury yields, it's 4.43. It went as low as 4.40. So as I keep repeating, Treasury yields on their way down, and the Brent also is now at 74.3, which is below 75. People were scared at 82 that they go to 100, and I think there is nothing to worry there. As usual, FIs and DIs did what they had to do. FIs get up in the morning, sell, and then go back to sleep. A good quantity of 3,500 crores. Yet the market held reasonably firm, I would say. DIs tried to support, but it could not succeed. Today, Nifty stock which is coming up with results is Mahindra and Mahindra. Other than that, we have Balrampur Chini, Delivery, Shipping Credit, Shipping Corporation, Petronet, Venky's, LIC, Chola Financial, Mazgaon Ox, Ola, and Sun TV. These are the important companies which are reporting their results. So if you see why the rupee has plunged versus the dollar, the key reasons for weakness is strengthening of the US dollar. Therefore, it is reflected in DXY. Now the DXY has peaked out, I think so, and we should see it coming down to 105 to 106, which means rupee will stabilize. Then US jobs data is very strong, so therefore most people will feel, why should we invest in emerging markets? So money is going there, and then the FI sell-off is there, and the rising US Treasury yields. These were the reasons the US Treasury yields have started coming down. US jobs data will be known today, how good or how bad it is, and the US dollar has started weakening. And FI sell-off is the only thing which is continuing. We have seen in the past that FIs always buy on momentum up and not momentum down or momentum sideways. So it is left to the locals to see whether we can hold our levels here, and then induce FIs to buy at higher levels. So FIs month to date has been about 4,400 crores. Except on the first day, they have been selling on other days. Year to date is about 91,850 crores, which is very, very huge. Tariffs also is one cause for FIs to move away from the emerging markets, and India is included in that. So that is as far as the so what should one look at? One should look at this band, which will be the support band for the Nifty. Right now, what we are seeing is one good day and 2-3 bad days. Here you see again a one good day and continuous bad days. And then you see here, it has never held. See, even here we've got one good day and then continuous bad days. Generally, it is the last time and the previous time, it has been one good day and generally it has gone below the previous lows. So this is the band which I would say one has to see. If by chance it breaks this, then we are in serious trouble. That is 21,300 and 250 to 21,350. That is a 100-point range. I think it will not break, but one cannot be 100% sure. If it were to break, then one has to really wonder whether we are going to go much, much lower than the previous low itself. Anyway, as of let us go positive into the RBI meeting. Hopefully, things will get better. And yesterday also we were bullish, and it has paid us off. Today we will continue to be bullish, but we will be cautious because you see there will be a lot of volatility today because of the RBI policy. Sometimes it is better not to trade on such days, but nevertheless, if we trade on the long side as usual, and we will trade smaller quantities, and we will be very watchful. So whatever you do today, I hope it is successful. Thank you for joining me.